Michael Chadwick here, and today I want to talk about how to qualify for a fix and flip loan. What do you need for credit? What do you need for experience? What do you need for paperwork? How fast is the process? We're going to talk about it in this quick video, but first, I've done over 125 fix and flips myself. I say that so that you understand, what I've done in my career and in the context and what I sort of bring to the lending side of the table when it comes to advising clients and talking through fix and flip loans and fix and flips in general. So first off, experience, right? We're going to give you an experience worksheet to fill out. You're also going to need to have a budget prepared. And the property is going to need to be either under agreement or at least, have an offer accepted. And then finally, we're going to ask you to fill out a 5-minute online application, right? So that's the general bulk of the paperwork. Experience matters more than anything in this business. You don't need to have experience to get a fix and flip loan, but the more experience you have, the better the rate, the higher the leverage. So for somebody that's got 15 deals experience under their belt, they may qualify for as little as 10% to 15% down. Somebody that has 1 or 2 deals done may qualify for 20% down max in terms of a loan, or 80% of the purchase price. So that's one thing to note. More experience, we're going to reward that experience with better rates, higher leverage. So you're going to need to understand when you go into the project too, what does the project need? You're going to need to take a deep dive into the renovation required. So I'm going to be looking at the property's condition, the property's need, and ultimately what the property is going to sell for at the end of the day, the ARV. So you're going to need to know all that as well. So it can't be a property that's abutting train tracks, the dump, a highway, any of those types of things. Like, we're going to look at that logically. Real estate's location. So the first thing we're going to do is just look at its location. If it's rural, it doesn't work. We're going to immediately kill the deal. We just can't fund rural properties. There's not enough asses for that seat. It's just as simple as that. So property location, property condition, ultimately properties after repair value, all things I'm going to take a quick look at, make sure that it makes sense before I package it up to underwriting. So we got experience, we got property location, condition. We're next is on to credit. Minimum credit scores for borrowers with a lot of experience might be as low as 640, 660. I just had a 15 experienced borrower come to me, and I think we pulled a 590 credit, and the loan was approved. It was that the borrower had maxed out his Home Depot cards on a previous flip. The property was being sold. We knew the credit would be improved. We looked at it logically, and we closed. But generally, our minimum credit score is going to be right around 660 for anyone with experience, and anybody without experience is going to need to pull a credit score of 700. Now, why is that? Well, we want to make sure that the exit strategy is secure. If you can't sell it, it's nice to know as a lender that you have the alternative exit of refinancing the property. And that's the final point that I think I need to make in this video, is that we're going to be looking at the exit strategy. We're going to want to make sure that if you're buying, renovating, and your plan is to rent and refi in the BRRRR strategy, that in fact you have the credit, the wherewithal to go and at least get a DSCR loan from us, or maybe even go to a bank. But if you're looking at it as a sale, then we're going to want to make sure that that property's value is there. We'll get an appraisal. It'll be based on the budget and the potential condition post-renovation. We're going to look at the comps, and obviously the property is going to be fully appraised with an ARV that supports the loan. And typically, again, depending on your experience, we're going to be underwriting between 65 and 70% of that after repair value. So, and then finally, loans are approved in 24 hours here. So I expect our application process, our pre-qual of your experience, et cetera, to take probably less than an hour in total. From there, I get it into underwriting, and then it goes, through our 24-hour approval process, and we're moving to a close after that. So we have experience, we have property condition, what it needs for renovation. We're going to be looking at your credit just as a barometer to make sure that you do have multiple exit strategies, that you do have the ability to pull from credit lines if you're over budget, things like that. And then finally, again, we talked about the exit strategy. We're going to want to make sure that the after repair value is achievable. We're going to also want to make sure that if something were to happen and you couldn't sell it, that you also could go and refi us out. So that's basically it. DM me if you have any more specific questions. It's pretty general, video, but it gives you, the basics on, how we go about qualifying you as a borrower for a fix and flip loan. Thanks. Hey, thanks for watching. You can follow me on all the socials at Mike Chadwick Jr. for Junior. I'll be talking all about hard money, private lending, DSCR loans, bridge loans, you name it. Anything related to investment property financing, you'll find it here. Thanks for watching.